So Kunal, hello. Nobody has energy to say hello also. I use the word as it's the morning after it. I mean,
It's
hello.
already, it looks like a prolonged week as it is.
Why?
Already.
Why today it's not
We're
Friday?
only on Wednesday.
Yeah. 2 दिन और बचे हैं.
Yes. After today.
Yeah,
Yeah.
2 ही दिन हुए.
So,
But can there be some respite, Kunal, today?
so I think the start could be good for the markets, but I'm not sure because what happens is after such kind of selling, at least the first 1 hour, there is residual impact which we see into the markets. Margin calls happen, portfolios get reshuffled, etc. There are a lot of things which get started off in, after such kind of a sell-off which, we saw yesterday. So I believe that the first 1 hour, couple of hours at least, the markets, should see some bit of more stock-specific pressure. The bigger concern for the markets is lack of the strong sector push. So, we're discussing banking and the financial names. So, I think if you remove that, except for that, most of the other sectors are just seeing, a consistent downtrend or a, reversal for themselves, whether it's a real estate index, whether it's a PSUs, PSC index as such. So, I think that's the bigger concern. Even the larger cap names, the infra, the capital good names, these stocks are also not, showing any kind of a major strength. There is no major incremental rise in the shorting positions from the index derivatives data which we saw in the last 2 days, specifically even on yesterday. So maybe I think what we are looking at is more of cash-based selling, and that's why you saw such a steep decline in terms of the advanced decline, almost a 1:9, 1:10 advanced decline ratio. The only positive or comforting part for the markets is that the sentiment indicators, the put call ratio, have come back into a deep oversold territory. We were almost at 0.47 on the put call ratio yesterday. So maybe that could indicate that on a sentiment basis, we could probably have hit a near-term bottom, and that could lead to maybe some bit of relief rally on a net-to-net basis.
Nooresh, hi, morning. What's your sense about mid and small caps in particular? Do you think we're going to see some more down days before any stability comes in?
So the risk lies more on the mid-cap names because that is where we've seen the maximum participation on the mutual fund side, as well as the maximum overvaluation. And what we started seeing in the recovery all through the last few months, mid-caps have found it tough to make a strong recovery. Yesterday also the index which actually made a new 50 new low, similar to 22,800 being broken, was the mid-cap 100 or the mid-cap select, etc. So the mid-cap space, which is where between say 100 to 350 stocks, that is where we would find it tough for a recovery. The large caps continue to look okay because they have not rallied a lot. Banking has been relatively strong. So the mid-cap part will continue to see pressure on higher levels whenever we bounce back.